Well, good morning.
Good morning, sir. How are you?
Doing well. And yourself?
Awesome.
Get some speakers dialed in here. There we go. All right.
What's the good word this morning?
It's almost the weekend.
Oh, nice.
Getting ready for one more adventure.
Oh, are you? You going away this weekend?
Yep. Went and picked up the camper again last night. So hauling it with the new truck.
Beautiful. Yeah, good. A
Tell you,
kind of
it's
a
really
vacation.
nice with that new one.
So it was kind of like it's kind of a vacation before your vacation.
Right. Yeah. It's a practice one before the really big one. Make sure we're doing everything right.
Where to this time?
Just a little bit south of me, close to the Iowa border.
Beautiful.
It's a little town called Lanesboro. Kind of in the middle of nowhere in a lot of Amish country. So they do a lot of furniture building down there and some interesting things.
Oh, okay. Good, good. Well, good. Um, is there a Mennonite community down there too?
There is.
Oh, is there?
Yeah.
Uh-oh.
Yeah,
You've heard about the Mennonite mob, haven't you?
you got to watch out for those guys.
Yeah. There's a show about them now.
Oh, yeah.
Yeah, if you haven't seen it, it's called Pure, Pure,
I saw that advertise.
on Hulu. It's pretty good. I watched the first couple of episodes. It's very, very good.
Interesting. Yeah, I was doing some fun planning my big one. You guys will get a kick out of this. I'll just show you real quick, then we'll come back to the fun stuff. Here's my path for my big trip.
Oh,
Starting out here, then we're going to stay in Glacier, then cruise up to Canada, then come back down. So just about 50 hours of travel.
wow.
So that'll be my 2 weeks after this week, or after next week, I should say. I'll start that the 17th.
Fun.
And I just got back from right here to buy the truck, so got to drive through all that. So there's Dan's path.
Yeah. Well, you're gonna put like how many miles is that? You're gonna put 10,000 miles on your car before or your new truck before you're done in the summer.
Right? Yeah, 2888. So 3,000 miles on that trip.
Yeah.
That's why I'm buying this one and not leasing it.
Yeah. Yeah.
This one's the keep it for a long time truck. All right, guys. Mike, Voltaire, John, and Newrug. Good morning, everyone.
Morning, Voltaire.
Good crew rolling in.
Nureg. Nureg, you sent me an email, and I wanted to thank you for that. I didn't see it until after Tuesday's session, but I appreciate the email that you sent me. Shankar, good morning.
Yeah, good morning, Shankar. Shankar, however you say that. I always butcher it. I'm good at that.
Yeah, yeah, I tend to butcher names myself. Brian, good morning.
Looks like we might be thinking about a little recovery. We'll see what happens here.
Yeah, it's pretty strong today. Oscillators went right up to plus 10 there pretty quickly. So good, strong move today. Probably, if you get a dip or something like that, if you're day trading, it's probably a good opportunity to get in on the long side, but definitely looks like a recovery here. I mean, it's the market has been, well, of course, it's been very volatile, but I think it's also, there seems to be like, I remember back in 2008, 2009, they were talking about the Fed put. You remember that talk?
That I don't.
Yeah, so there's like a Fed put in that they were selling puts, and they were propping up the market. And basically the Fed was in there stepping in every time the market dropped about 800-900 points. The next day it would go up 700-800 points, and a lot of people were saying that it was the Fed basically selling puts like crazy and then buying up all the stock, and then the market would go up the next day. It was kind of an interesting. I mean, it was a time when they put trillions of dollars into the market. My understanding is that there was a couple trillion that was actually missing.
Wow.
and they never found it. Those, of all the money that they put into the market, there was some that was missing, and there's all kinds of conspiracy theories around that. But although, and I think the Fed at one point did say they were buying securities as well as their own treasuries. So I'm not surprised. They want to keep this market up because they know what happens if it declines.
Oh, exactly. Especially when we just had the first interest rate reduction in a decade.
Yeah. I mean, that just kind of blows my mind that we're still at like 2.25% on the Fed funds rate when we've been in a 10-year recovery. We should be at 5, 6, 7% by now, and it didn't happen. So, to tell you the truth, this market is totally irrational. It really, really confuses me. I see 10,000 people a day, baby boomers retiring. They're going to be drawing on their 401ks and all that kind of stuff. The millennials are just getting into their peak kind of family expenditure period in their 30s now. When they're buying homes and they got kids and they're raising a family, they're buying furniture and all that kind of stuff. So maybe that's what's propelling this, but I don't see a lot of millennials in the market, in the traditional stock market. But
no, yeah, it makes sense because they're the ones that don't believe in it and don't think that they need to save because they're not at that point in their life yet. And
well, I think they saw they were just teenagers or younger when the financial crisis hit 2008, 2009. And a lot of them are just not, they saw what happened to their parents' savings and stuff like that. They got, wiped out. Maybe they were in one of those homes where the mortgage was upside down and they had to leave their house and because, parents couldn't afford the mortgage and stuff like that. So they kind of went through all that pain as a teenager, and it probably made quite an impression on them. The millennials that I know from my kids have all just gone into like index funds. So They don't do any individual investing. They just stick all their money that they have into 401ks and index funds, and they're trying to avoid the volatility, I think. So maybe that's what's propelling the market forward. I don't really know. The big thing, of course, that everybody's worried about is both the China trade situation and the debt. U.S. debt clock keeps ticking. That's getting way out of line. It's just insane.
Yeah, I just heard an interesting one again yesterday on a show I was seeing. I think it was from the weekend, and now they're talking about, everyone always complains that the Democrats are the one that spend all the money when they're in office and the Republicans are the fiscally conservative ones. Well, it's like that's kind of out the window where they're spending as much as the Democrats ever have, and it's completely just blown up.
Yeah, and actually, I think it was during the Carter administration, or maybe it was the president just after the Carter administration was the last time that the U.S. actually ran a surplus and not a deficit.
Wow.
Yeah, that was back in the early 80s, 70s, I think.
Yeah, because Reagan took over in 80, right?
Yeah, exactly. And then after that, the debt kept going up and up and up and up and up.
Yeah, then we had Reaganomics.
Yes. Reaganomics, I remember that.
This will date you, Dave, but that's when that's as old as I remember, like the first president. I remember Carter.
Oh, really?
I was growing up. Yep.
So I grew up during Nixon and the whole Watergate deal.
Oh, see, that'd be interesting as a kid to see that.
Yeah. It's funny. I remember that stuff. I remember that. It's crazy.
It's funny how things stick in your head like the jelly beans.
Yeah, and then when he got booted out of office, it was Johnson, right?
Yeah, I think so. Yeah.
Yeah, it was Johnson, I think. Yeah.
History lesson now.
Yeah, he was a. I guess he was somewhat of a nutcase, but anyway, what president isn't, huh?
Right. John's got a question we can cover quick. I'm assuming I should touch on this real quick. I should say anybody that took that down trade this morning probably wanted to exit that right around the fifth column almost hitting, or maybe now. It's looking like a nice little setup there. It's moved nicely for a down. That's what the TSA called for. That's the 5-minute chart. Here's the 1. So definitely some volatility, but it did make the down move. And Dave is now using the newer spreadsheet for the alerts I did see this morning. So we are evolving, and that will be for you guys to download tomorrow after the market close.
Yes. And I decided to go ahead and use the beta, even though it's not distributed yet, because it also hinted yesterday that the spread was going to be negative yesterday. And but the current spreadsheet that we're using did not. So I felt it was best probably to go into the new spreadsheet as soon as possible to get better readings. You can see the 0 in the first column of the binary trend, which it did not show up on the regular the spreadsheet we've been using, and so that indicated a negative bias for yesterday. So today I said, we better start using the new spreadsheet.
So there's a difference in the 10 columns versus the 5 columns.
Yep, and see that's all positive there. But on the new spreadsheet it was negative starting yesterday. So we're going to be using the new spreadsheet from this point forward. John P. asked, Dave, what study are you using on the last YouTube video from Market Timer? Yeah. Interesting stuff. And actually Andrew did quite a bit of work on it. After he saw that video, he said, Dave, what do you got there? And I said, well, gee, I'm trying to figure out I want to add signals to the chart. And so he goes, yeah, I can do that. And today he actually made another improvement. So I was using the 1 minute and the 5 minute. In fact, if you want to switch over screens here.
Sure, I can stop share.
Yeah, very interesting stuff. Yeah, that's the one. Can you guys see that okay?
I gotcha.
All right. So, what he did was really interesting. In the video, it was MTX, I think, because we didn't have a name for it, but now we're calling it MT Signals. Originally, we just wanted I just wanted arrows on the signal chart in order to determine whether or not I should take a long or short position. Then I was using the 1 minute and the 5 minute time frame in order to confirm the positions. And so what he did was he came up with a very interesting twist and concept, which I didn't even know was possible. And this is how amazing Andrew is in his coding skills. You can actually set the input to a multi-factor. So for example, if you're using a 1 minute chart and you want to compare it to a 3 minute chart without actually having both of those windows open, you can set the input to 3. So that's basically, if you put it on a 1 minute chart, you're also confirming on a 3 minute chart. If you put it on 5, you have a 1 minute chart open, it will compare the signals to the 5 minute chart. So you can adjust the input of the time frames that you want to have confirmation of the signals. And I'll show you back on the chart, I'll show you how that works and where the signals pop up. But this is a fantastic step forward in this indicator. So instead of having 2 windows open and kind of, and then splitting your focus between 2 different windows and maybe having some missed opportunities there, you can simply decide, well, I want to trade a 5 minute chart, but I want to compare it to a 10 minute chart. So all you have to do is set the multiplication factor to 2. So if you're on a 5 minute, 10 minute, right? if you want to compare it to a 15-minute chart, so you're on a 5-minute, you want to compare the signals to the 15-minute chart, set it to 3. So it's a multiple of the current chart settings. So in this case, I've got it on a 1-minute chart. So what it's doing is it's comparing the signals. And this might be a little bit hard to read because it's kind of dark down here. I'll work on the coloring. But so we're on a 1-minute chart and it compares it to a 3-minute chart. And what happens is you get these double arrows. So there's actually a dark green arrow here and a light green arrow here. And there's a dark red arrow and a light red arrow. So when you get confirmation on the higher time frame, it will actually show up as 2 different arrows. Really, really interesting stuff. Going back here, nice double arrow here, nice uptrend, nice double arrow here, nice uptrend. So all of the double arrows are confirmations on the higher time frames. Cool, huh?
That's interesting. Yeah.
Very cool.
So the darker arrow is the higher time frame, and the lighter arrow is whatever your chart's on. Is that what it was?
Nope. The darker arrow is opposite. So the darker arrow is the 1-minute, and the lighter arrow is the 3-minute. I've got it on a 3-minute. That's a 3-minute was not the optimal. I'm still playing around with different time frames. 1 and 5 is actually optimal. And then I'm using it on the 5 and 15-minute. The shorter the difference in the time frames that you're using. So if you use a 5-10, a 1-5, a 10-15, the shorter the time frame, the more signals you'll have. Also, the longer the time frames, the larger the moves will be,
sure,
and greater the profits. But your hold time is longer as well. So really, really interesting setup here. So here was a down signal, and this is on a 1-5. Really nice little trade right in there. So still testing it out, working on the different time frames to see which ones are optimal. But I really, really, I didn't even know that this was even possible. And that, so Andrew is a excellent coder. I really appreciate the work that he put into this. Now I'm just going to go through and look at the different time frames and see which ones are the best to use as far as the multiplication factors go.
Interesting.
Yeah, very, very interesting. I can't see the chat. Where's the chat? Oh, there we go.
Keith says try having the time frame above and below the time frame being traded. Above and below the time frame being traded. What do you mean, Keith?
Yeah, I'm not sure what he means by that. Oh, no, I'm not sure what he means by that.
I'm trying to sort it out in my head too. 10 minutes. 10. Oh, I'm mutual. Where are you at? Where's Keith? Here's Keith. All right, Keith, you're unmuted.
The Max trading system does this, but they do it with EMAs, and they use the time below that you're trading and the time above. So if all 3 time frames are moving the same direction, you have one of your entries.
Oh, he's talking about, so if you're trading, like if your goal is to trade a 5-minute, you'd be looking at like a 1 and a 15 or whatever.
Yes. It works really well.
Okay.
That way you've got 2 other verifications, 2 other time frames moving in your direction to make the trade.
Okay, and maybe I didn't have my 3rd cup of coffee yet, but I still don't quite get you.
If you're trading the 5-minute chart,
yeah,
have the 10-minute chart on this and have the 1-minute chart on this.
I see what you mean. Okay.
And then that way, if all 3 are moving in the same direction, you've got a triple verification for the trade.
Gotcha. All right. Oh, that's interesting. Yeah. Yeah. Very cool. Thank you for sharing that, Keith. I appreciate it.
Yep. All set. Thanks.
You bet. Yeah, so it's kind of like what you're doing already, and just adding a third one to it. So you're combining with the multi-factor too.
Yep.
Right?
So
Yep.
I've got a 1 minute, and I've got the multi-factor on that, and then I've got a 5 minute, and then I maybe a 10 or 15 minute on that. And so, yeah, that's a very, very cool idea. I like that a lot.
Right on.
Very cool. All right, that is all I got for today. Now, we're still beta testing this. So we're going to be probably releasing that this weekend, I'm guessing. So this weekend, it'll be in the swing day trading system. So if you already purchased the swing day trading system from Market Timer, then this will be added. This is a add-on to that set of scripts, and you're all set to go. So if you haven't, also, there's likely another price increase to the swing and day trading system setup script. So if you haven't purchased them yet, you can still get a pretty good discount through Dan. If you're a premium or a PC client, contact our support. You can get a pretty decent discount yet on those scripts, just to let you know. But this is very, very cool. The video that I did was basically using the Micro E-minis and the 1 in 5 minute setup as John has referenced here in the chat. And it was fun. It was a lot of fun. I mean, basically I'm just in there scalping, $5, $10, $13, $7, $5 using Tradovite. And also I did use Tradovite without the plan. So they have different plans where you can reduce your commissions to almost, I think they have one plan that's free, so you don't pay any commissions at all. But I use just the regular plan where I'm paying 79 cents, which includes the exchange fees. So about $1.80 on a round trip. Mark asks, what are the dots above and below? Those aren't dots, those are actually arrows.
Which I think he means the white dots on the chart.
Oh, okay. That is a sine wave study. Let me see if I can go into that.
Looks like it was a red one yesterday.
Yeah, it's a sine wave study. If it's got an X by it, it's still in beta, but it kind of works with the Renko clouds. It's a sine wave study, and basically just kind of tells you if it's white, it's bullish. If it's red, it's bearish. That's all. I haven't found it super helpful. The only thing that what it does is it will change colors, white when it's bullish, and it will turn red when it's bearish. So it is somewhat helpful, but I still like the Renko cloud better. I'm undecided about whether or not we want to use these sine waves, but that's what they are.
Maybe use confirmation with where SR1 and SR2 show up. Like today we got SR2's below, so it's bullish.
Yeah, exactly. So it could be used something like that. But I've got this on a 1 minute chart. If I switch over to a 10 minute here, let's see, because the SRs only show up on the 10 minutes. They're painted correctly on the 10 minutes. I hate that. I have to repaint everything. There we go.
Good job, Shankar, taking care of us. Tradovate. He's got the links in there. Good job.
Okay, great. Yeah, so it's interesting in that it kind of goes above and below the Renko clouds. So it's above and below the Renko clouds, which is kind of interesting.
Is there any rationale as to where it paints it?
What happens is the dots kind of show up as it comes down into that area. So I'm not sure if it's like identifying a support area or not. It's kind of interesting how it kind of painted below the Renko clouds here, and that acted as somewhat of a support. And then it kind of painted above it, which is kind of a resistance area. So it's above and below the Renko cloud, which is typically where we want to take short positions, right? If we're above we consider the Renko cloud the fair value area.
Right.
And if it's above, and we get a signal, we want to have it decline below that back into the fair value area. And it started painting these resistance points.
Interesting.
And then it started painting these support areas. So after this bar was formed, the next bar painted this red dot, which indicates a support level, I guess. And we're also we're pretty far below the fair value area of the Renko cloud. So it's pretty interesting. And now it's painting just above the Renko cloud again. So maybe that's indicating some sort of resistance area.
Yeah, price is coming down through it again, right at it right now.
Yep. So that's also in beta. That's also in beta. Now you notice down here the signals did not form, and I think it's because if you do not have the time frames listed in your favorites, the script will not know where to pick up the time frame, I believe.
So what's the signal set at right now?
It's it's set at 5.
And you don't have a 50-minute. There you go.
And I don't have a 50-minute setup. Whoops, not that one. It's set at 5.
So
yeah.
Switch
So
that to 3. It should work.
Yeah, I'm pretty sure I have a 30-minute. So let's see. I think that's the reason, because I was kind of playing around. I just got it this morning from Andrews, and I'm still playing around with it. So if I set it to a 3,
wait for it. I gotta dial it back in.
yeah, I always end up with 340,000.
Yep, there they come.
There it is. Yep. So if you don't have the 30-minute or the time frame on the multiple, then it's not going to paint.
Okay. Yeah, so you need to have. Yep, I gotcha.
Yep. So very exciting stuff. Very interesting. I'm kind of looking forward to testing it out to see which time frames are, most optimal for the entire system. But it's pretty exciting. Pretty exciting stuff.
So is there any maxes that you see? Like it looks like a positive and negative 50 you're kind of spread to there. If you look back historically, does it ever go farther?
No. Well, here's another thing too about this is that it's based off of the code of the synthetic volume. So it's using the synthetic volume base code in order to draw the signals. And so what you're doing is basically you're following price. And so what it means is it's also usable after session hours.
Sure.
So you get signals after the session hours as well, which is fantastic. So here's a nice little up signal confirmation here. Nice up move. That was
in the middle of the night. Yep.
Yeah, it was middle of the night. Yep, exactly. So looking forward to this, releasing that probably this weekend. A little more testing to go, but it looks like it's pretty well set to go. I think we're going to change the colors of the darker ones to something else because it's kind of hard to see unless it's just my 60-year-old eyes can't see it. But.
Yeah, some of those darker, lightly shaded ones are definitely a challenge, I would say.
Yeah, definitely. All right, guys, back over to you.
Yeah, just like we thought, it has continued to move up on the NDX.
Yep, no doubt about it. I mean, we had very strong oscillator this morning, moving higher. Really, when it's that strong, then you know that, and you got the synthetic volume is moving higher. You got the oscillator moving higher, practically flat line there. So
159 spread. That's a big spread.
That is a big spread. And typically what happens is when those spreads start to widen out, especially kind of, I measured it on the SPX when it's like 20 or 30. You got an SPX up there?
16 right now.
16. Okay. When it hits like 2023, that's typically a top of a market as well. So when they're really narrow, like they were yesterday, that's like kind of beginning of the bullish move. And now we've got 16. When it hits like 2023, that's probably the top of the move. Very typically, it indicates a extreme. Is David in the room this morning?
He is not. He did send me a note.
Mm-hmm.
Let me grab that note. I wanted to let you know. I think he sent it this morning, actually. Or no, it was late yesterday. He was testing with some moving averages at the same time for specific values, but it did not work out. That was one thing that he had mentioned he was going to ask about. So during our conversation yesterday, so he had done some with the Hall moving average.
Oh yeah. The issue I have with moving averages is that they're all delayed.
Right.
They lag price, and and I try to, in all of the indicators that we built for market time, we try to stay away from lag, and instead we've gone to a kind of a cumulative tech, I guess you could call it, strategy of determining action in the market. So, I mean, if you look at the code for the swing oscillator, basically we're taking multiple time periods of internal market data and adding them together to determine whether or not there's a trend change coming. With the synthetic volume, it's based purely off of the price action. And so we've translated the typical algorithms that we've used for internal market data, for example, on the Market Timer Excel script or some of the other scripts, and we've converted it to use price data only, but with the same basic algorithm. And so far, I think it's working out absolutely fantastic. We just have, just love it. And none of them they're not average, they're cumulative. So you have, like the decline that you see there on the NDX, if it's going down, you see a cumulative decline in the volume as it's declining. If you used a moving average for that, you wouldn't have had an extreme level on the decline until you hit the bottom, or after, actually, probably after. So it would have lagged price. There is one trick that you could use with the Renko Cloud if you wanted to use a moving average of any kind. You can set the Renko Cloud to like 1 or 2 in the settings, and that will give you a smaller Renko Cloud that you could use almost like a moving average. I would rather do that than use a moving average.
So just to show that, by that you mean
on the old script you could do it. I'm not sure. Yeah, so it's automatically set to take the average of the ATR, the average true range over the last 120 days periods. But if you set that to like a 2 or something, see if it does it. On the old script, you could do it. I'm not sure it'll do it on this script. Yeah, because it's too current. It doesn't because it's using the current ATR.
Sure.
It's probably not going to do it. But on the old script, you could do it. So if you guys have the old script, if you don't have the old script and you wanted to use it as a moving average type of thing, just contact support at Strong Market and they'll send it to you.
You just have to do a rename because I think it's named the same thing, right? So
we'd have to do a rename on that. Like it'll be version 1 or something.
Right. Legacy or whatever. Yep.
Mm-hmm. So anybody else get into the Valar spread short this morning? You guys do that? You got in, Mark? Great. How'd you do? It was pretty volatile, but it was definitely down. Oh, you got on using the Renko Cloud. Interesting. Okay.
Yeah, it's still moving.
Yep, still moving down. That was the call for today.
Did you exit yet, Mark, or are you still in? Okay. What'd you get out for, if you can say it? Just say per contract, if you're doing multiple contracts. You got out
just before 10 a.m.? You mean this one contract, $600? Nice.
Oh, you got out before the trading room started. I got you. Perfect. Yeah, well done.
Yeah, so where was that time frame? That's right around 9 a.m. there on your time frame? Yeah. 9
yeah, I'm guessing he hit it right here.
No, that's 9:35. He's got out at 10. Yeah, so he's right there. Nice. Good job. Yeah, the new spreadsheet. I had to use the new spreadsheet because I saw that negative trend on the new spreadsheet yesterday. Didn't put it in the TSA, but today was definitely it looked like the trend was going negative. So I had to use that for today's TSA.
Mark asks, so that Renko Cloud, he's adjusting the cloud setting. You mean for the 120 or the what we were just talking about, Mark? Is that what you mean?
I think you have the original Renko Cloud. Do you have that in the download area? You may have that original one in the download area.
I might actually.
Yeah, because I think I gave it to you for the volatility arbitrage spread stuff.
I think you're right. Let me check real quick on my other screen here.
Okay.
While we're chatting.
Yeah, so he is using the old one. So you guys don't have to bog down the support at Strong Market.
There you go. It's already there for you.
Yeah, you can go right into the Tradingology HOLM download section, and the Renko Cloud, the original Renko Cloud, should be there. And so if you do that, then you can adjust the ATR to a smaller number and use that almost like a moving average. I tested that out when I first got that together, and it worked really well, actually. I liked it.
Oh, you know where it is? It's in the Valar Masterclass, I think.
Ah.
Because it's for that. So what I'll do is I will rename that one so you guys don't get it mixed up if you have the new one from Strong Market. So I'll rename and re-upload it so it doesn't get confused. So don't grab it right now.
Yeah, maybe just call it the VA Renko or something.
There you go. Yep. See, Mark, now it's just teasing you. Don't feel bad.
Yeah. See, we have to think about the reason why we're doing volatility arbitrage in the first place. And it's not just pair trading. It's not pair trading. It's really, it's using two different instruments with different volatility profiles. There was a guy, there's a software program that's kind of popular. It's called Pair Trader, I think. And I think it runs only on Windows. And I watched a video he did yesterday, and the pair that he came up with, I took a screenshot of the video, and one of the pairs that worked for him was, let me see if I can find it here. Where is it? PTEN minus VET. And he made about $500 on that position on the long side. And that looks like actually looks like a pretty decent pair. He had two, in the screenshot that I took, he had two that made $500, and he had like 5 different pairs that lost $1,500 each.
Jeez.
So, the software, I think, will find, and what he does, the software will actually find the correlation. The way I understood the way he was talking was he was looking for the correlation between different pairs of stocks or ETFs or whatever, you want to input. And so when the correlation is high, you would do a pair trade to say, but I don't think there was any signals about which side of the trade you should take. So I like the software. I think it's pretty interesting. However, you still have to have some methodology, some strategy to determine which one you're going to short and which one you're going to be long on. And the reason why we do this, and the reason why I started thinking about volatility profiles of different trading instruments, was to get away from the traditional markets. When we trade the volatility arbitrage spread, we don't trade like everybody else. We're not trading a longer short position in the Dow or the S&P 500. This is a different market. So we're not trading the same market as everybody else is. And what we're trying to do is eliminate the noise of and the kind of the timing of the traditional markets. Well, should we go long or should we go short? And Market Timer is probably the best at that, especially with the new scripts that they have. But still, there's more predictability, I think, in my opinion, when we use the spreadsheet to determine the direction of the spread. And we're trying to get away from the manipulation too. That's the other thing too, is we're trying to get away from the manipulation of the futures contracts on one side or the other in order to trade. It's really a completely different market. I don't know, maybe you have some opinions or maybe something you'd like to add to that, Dan?
No, absolutely. I know we've covered it a couple times, but it's, people think that, it's funny you say manipulation, especially recently with China and currencies, just trying to take out any of that gameplay, whether that's the Fed or any third party country or whoever it is. Just trying to get away from the garbage that messes with your trading when you're trying to do one instrument. This is absolutely the core of that. And we've talked, you guys have probably heard in the videos, it's not like Chevy versus Ford where, hey, one company can completely tank. There's something with the nuance of the YM and the NQ that one cannot take off and just leave the other one behind forever. It just does not happen. They always have this, they return and they oscillate. That's the core of this entire strategy. What it is at the core of it, I don't know if anybody can put their finger on it or to say exactly why it happens, but it's what has been observed over forever since the YM and NQ have been in existence, or the NASDAQ and the Dow. And just being able to understand that relationship and its movements is key.
Right. Yeah, it oscillates within a range. So that's what the multiplier number is up in the symbol window. That's what we use. We say, okay, it's going to oscillate in a certain range, 3.44 NQs to 1 YM. That's the ratio that we use in order to, and then sometimes it goes up to 3.7, and the bottom is around 3.3. And it typically oscillates. Now, the last several years, the trend has been actually completely down. So the NQ has been stronger, and that makes sense because their technology, their growth stocks has been stronger than the YM, which is the Dow 30, which is, old industrial, multi-country, multinational industrial stocks. And there's not as much growth in those as there is in the NASDAQ, which are, technology and growth stocks. So it makes perfect sense. So the general trend has always been to the downside, but it does fluctuate within a range on a consistent, regular basis. Mark says fair value being value of the difference between the Dow versus the NES. There's a fair value, I think, between those two. And I think from the conversations that I've had with traders and and a couple of institutional traders is basically, hey, when they see that the market is in trouble, they're going to gravitate towards the Dow, and the NASDAQ stocks are going to get hit hardest. And when they think the economy is okay, they're going to go with the NASDAQ. They're going to go with the high growth stocks. So the Dow is basically is kind of a safety because they're multinational. They have less risk up front. And the NASDAQ is the growth stocks. So when the economy is good, they're going to buy the NASDAQ. When the economy is bad, they're going to buy the Dow. And that's why we see in the spreadsheet, the new spreadsheet, if you take a look at the new spreadsheet, we have this kind of negative correlation of when the Dow and the NDX are going up, the VA spread is negative, typically. Just above there at the very top of that page on 1138, you can see 3 days in a row, the Dow and the NDX were up and the spread was negative. And just from that insight alone will tell you that, hey, when institutional buyers are looking at allocating their funds, if they see the economy is good, they are going to buy the growth stocks, and that's in the NASDAQ. And that's why the VA spread is negative on those occasions. And when they see that when if you scroll down to the bottom, when we started to see the kind of the sell-off there, that's why the spread went positive when we had the decline in the Dow and the NASDAQ, because they were buying the Dow as it was declining and selling off the NASDAQ as fast as they possibly could, because they don't want growth if the economy is pulling back. And so, to your point, Mark, it's fair value based on what the economic outlook is. Mark says he likes the new high-low on the new spreadsheet. Thank you, Mark.
Good.
Yeah, I like it too. Yep.
And just so everyone's clear on what this high-low is, the low means the Dow, the lower volatility.
Yes, basically the low is the Dow, that's a lower volatility, and the NASDAQ is the higher volatility.
So if on the day, if it's positive, this is a plus.
Right, exactly. That's all it does. That's exactly what it does. So all it's doing is basically saying, hey, we've got it's a binary trigger. Okay, are we up or down? That's all we want to know. So if it's up, it's going to be a plus sign in that low column on the Dow. And if the NASDAQ is up, it's going to be a plus sign in the high column. And then we've got the VA, which is the volatility arbitrage spread for that day. An interesting insight into this. I don't know if I should share this or not. It's a little weird, but I don't know. It just kind of popped in my mind yesterday. With the new spreadsheet, I saw, it's going to go negative. Well, the fact that the market didn't start off that high yesterday, it was up. I mean, it was up a little bit, but when the volatility arbitrage spread went negative, I said the market's going to go up, right?
Because that's the right.
If the volatility arbitrage spread is negative, then the market's going to go up. And I took a long position. I said, okay, well, let me test this theory out, that if there is a negative correlation and the VA spread is going down, the probabilities are pretty high that the market's going to go up.
Yeah. Now you're getting deep. I like it.
And then when if the spread is positive during the day, see, look at the spread now. The spread's going down, right? And it's negative, and we're up. What are we doing on the Dow now? We're up 162 points.
Oh, and NASDAQ's killing it. NASDAQ's up 1.2%.
Wow. Yeah, exactly.
Here's all.
And here's another thing too that was kind of interesting, is that I think I remember a comment from one of the VA participants, or maybe it was a PC, maybe he's a private client. he said something about when he looked at his P&L, and I don't look at my P&L that much. I just want to make sure my balance is going up. But he went through his trades, and he said, most of the money I made was on the NASDAQ. And I said, yeah, that's interesting. So what is happening is that the Dow is almost like a pivot point in the spread. The Dow is a pivot point. And you're basically trading the volatility, and this is where the volatility of the spread comes in. You're basically trading the volatility of the NASDAQ.
Mm-hmm.
And so the NASDAQ is the one that rotates around the pivot point of the Dow. The Dow is the pivot point, kind of the stability, and you're trading around that using the NASDAQ as the profit and loss instrument. Almost like the way the moon travels around the Earth.
The one part that you don't want to, it's a slippery slope, because don't always think it's, hey, if the spread's down, the NASDAQ's up. Sometimes it can be because the Dow is going down faster than the NASDAQ is.
That's right. Yeah, sometimes that does happen. That's why it's important to use the spread and not just trade the individual instruments.
Right.
Absolutely. Yeah, because you do have those days in which you have all three up or you have all three down. And like you mentioned, Tuesday, those can also be transition days from a long spread to a negative spread and vice versa.
Anurag asked if these are the new one. These are the new Renko Cloud on this one, Anurag. This is just the futures contracts and not the index is what this chart is. It's looking at all four major indexes that I watched: the YM, the NQ, the ES, and the Russell. So it's just one I quickly brought up since the market's going up, and I can easily see all four percentages in one spot: 1.4, 1.3, or 1.6. That says 1.1. They're all almost 0.82 on the YM. So that's how you can. That's the spread, right? And I think Alexander's here. Alex, we had a call yesterday. We were talking exactly about that. He says, "Well, there's the percentage for the YM and the percentage for the NQ are on the cash indexes." He's like, what if you just watched those percentages? And then, I said, that's exactly where it all started, sir.
Yep, that's what I did.
Just stare at those two numbers.
That's exactly, and I still do that today. It's a habit that I've built in, and I look at the percentage changes in the overnight session.
So yeah, looking at those together, everything's going up, spread's going down, negative correlation. You got it, sir.
Yep.
Love it.
All right, guys. Really good insights today. Appreciate everybody being here. Thank you so much. We have just a couple minutes left. If you guys have any questions, we'll wrap it up for the day. Dan can get ready to plan his weekend.
Yeah. And if you're not looking at crypto, you better start looking at it. Maybe we'll save that for next week.
What's that?
I said, if you're not looking at crypto yet, you better be starting.
Oh yeah. See, there's a negative here. Oh, you want another kind of an interesting thing? For the last 6 months, I've been tracking crypto versus the stock market. There's an inverse correlation. If you look at the chart of Bitcoin over the last few days as the market has been declining, Bitcoin has gone from 10,000 to almost 12,000.
Interesting.
Yeah, there's a negative correlation going on with crypto and the stock market. So pay very, very close attention to that. We can talk about that next Tuesday. I think it's pretty interesting.
Yeah, good idea.
Today, Bitcoin is down $250, back down to about 11,700. It was over 12,000 when the market was declining, and now it's down as the market is going higher. So there's a negative correlation going on there. It's a non-correlated asset. And if we do get some really strong moves to the downside in the market because of all the interest rate stuff that's going on, the negative interest rates that are going on in Europe, I would not be surprised to see it come to the United States. If that were the case, I think we're going to get a pretty good sell-off in the markets. But like I said before, the Fed is kind of between a rock and a hard place here, because if the dollar continues to move higher, which it has, it's going to attract money, and they're going to have to raise interest rates. So it's a really, really tough situation that they're in right now. In any case, if the market does decline significantly, I think we could see a very, very sharp move higher in crypto and digital assets. My favorite is XRP, which is being suppressed right now, and it's a great place to buy, in my opinion. Just not investment advice, but just in my opinion, it has the most potential, I think, of any digital asset out there. But Bitcoin is the child poster for the crypto space, and that negative correlation has held up pretty well over the last 6 months.
Very cool. Yeah, Nureg mentions an CHB. Yep, got the nice short at the open. Perfect. Yep, looking at the 5 and the 1 minute Nureg, looking for potential entries. So we're right at 8:20 my time here, 9:20 Eastern. Looking at the 5, how it's trailing down here. Had one little mini, I guess you could call this a miniature fat tail in a 5-minute chart, where that's your good entry point, is like right there.
Yeah.
As this is coming down, this is both coming down. You combine the 5 and the 1. That's our highest probabilities. You had to ride through this one little one, but that 1 minute should not shake you out that fast.
Yep. The 5 minute was really kind of told the story there on that one. That's a good entry point right there. Perfect.
Or you wait until after, and you could get in after this move happened. You might miss out on part of it, but once you see that the 5 minute is no longer building, you could enter here, I suppose, as well. After the fact, and you participate in this part of the move down instead of riding through the volatility. You're welcome. Happy to help. Voltaire says new shut. Yep, it's coming out after the market closes tomorrow, Voltaire. So it'll be in with the rest of the spreadsheet updates. I think I'll bring my laptop with me.
Yeah, definitely. CHP, I'm not familiar with who's CHP.
I don't know. He's elusive right now.
He says I'm still in the trade, or he or she, probably he though.
Still
in the trade, 2 E-minis, and I'm up almost $200. Nice.
There you go. Yeah, still going down. Look at that.
Yep, still going down. Awesome. Good job. Nureg, you're welcome. Very welcome, guys. Have a great weekend, and we will see you. So you don't start your big vacation until after next week, right?
Correct. We'll still have the trade rooms next week.
Tuesday. Beautiful. All right, guys. Have a great weekend, and we'll see you next week.
Take care, everyone.
Bye, Dan.